Chapter 15. The buyer purchased a residence for $195,000. They made a down payment of $125,000 and agreed to assume the seller's existing mortgage, which had a current balance of $123,000. The buyers financed the remaining amount, which is $47,000, of the purchase price by executing a mortgage and a note to the seller. This type of loan, which the seller becomes the mortgagee, is called a purchase money mortgage. A buyer purchased a new residence for $175,000. The buyers made a down payment of $15,000 and obtained a $160,000 mortgage loan. The builder of the house paid the lender 3% of the loan balance for the first time and 2% for the second year. This represents a total saving for the buyer of $8,000. What type of mortgage arrangement is this? Buy down. Which of the following is not a participant in the secondary market? Credit union. A buyer purchased a house for cash 30 years ago. Today, the buyer received monthly check for a mortgage lender from the mortgage lender and supplement her entire home. The buyer most likely has obtained a reverse mortgage. If buyers seek a mortgage on a single-family house, they would be least likely to obtain the mortgage from a life insurance company. Which characteristic is a fixed-rate loan that is amortized according to the original payment schedule? Is the amount of interest to be paid is predetermined. The characteristic of fixed rate loan that is amortized according to the original payment schedule is the amount of interest to be paid that is predetermined. In a loan that requires periodic payment that do not fully amortize the loan balance by the final payment, what term best describes the final payment? The balloon. A developer receives a loan that covers 5 parcels of real estate and provides for the release of the mortgage lien to each parcel when certain payments are made on the loan. This type of loan arrangement is called a blanket loan. Fund for Federal Housing Administration, FHA, loans are usually provided by approved lender. It's not provided by the seller, it's not provided by the Federal Reserve or by FHA, but by approved lenders. The provision of the Truth in Lending Act, the Regulation Z, require all of the following to be disclosed to a residential: a discount point, a loan origination fee, the loan interest rate, except the real estate brokerage commission. A home is purchased using a fixed rate, fully amortized mortgage loan. Which statement regarding this mortgage is true? Each mortgage payment amount is the same. Which statement about interest on a fully amortized mortgage or deed of trust loan is true? The interest may be paid in arrear, that is, at the end of each period for which it is earned. The primary activity of Freddie Mac is to buy and pull back all conventional mortgage. The Federal Equal Credit Opportunity Act allows lenders to discriminate against potential borrower on the basis of amount of income. The Federal Equal Credit Opportunity Act allows lender to discriminate against potential borrower on the basis of amount of income. In which type of loan is the loan amount divided into two parts to be paid off separately by periodic interest payment, followed by payment of the principal in full at the end of the term? Straight loans. In which type of loan, again, in which type of loan is the loan amount divided into two parts to be paid off separately by periodic interest payment, followed by payment of the principal in full and at the end of the term? Straight loan. In an adjustable rate mortgage, the interest rate is tied to an objective economic indicator called an index. Which law requires that all advertising and references mortgage finance term contain certain disclosures? Trust in Lending Act or Regulation Z. Again, which law requires that all advertising and references mortgage finances term contain certain disclosures? The Trust and Lending Act or Regulation Z.